Do you want to learn how some traders can spot the best opportunities and act on them fast while you're still wondering what to do? If you do, then stick with me for a while and I'll show you how it's done. In this trading strategy, we have one main indicator: previous day high and low breakout bar. But before we get into it, let's tweak it a bit to match what I'm doing here. With these changes, the red line is the highest price from yesterday and the green line is the lowest price from yesterday. So if the price goes above the red line, it means we have a buy signal in this strategy. But if the price goes below the green line, it means we have a sell signal. But here's the thing, listen carefully. Sometimes these signals are not reliable because the market is not moving much or it doesn't have enough power at that moment. In those cases, we need a backup plan. Don't worry, I have you covered. Just go to the TradingView Indicators section and add the corrected moving average indicator to your chart. But before you use this indicator to filter signals, make sure you set it up like I'm doing. Now, here's the important part. If the price is above the green cloud of the corrected moving average, it means the market is going up. But if the price is below the red cloud of the corrected moving average, it means the market is going down. But there's a catch to using this indicator. If the cloud is red but the price is above the red cloud, it means we should not trade. Same thing if the cloud is green but the price is below it. That's a no trade zone. Now, if we combine all these things, entering a long trade has a few simple steps. First, you need the price to go above the red line, which is the highest price from yesterday. Then the market needs to be going up. If these two things are true, you're good to go for a long trade. Next, for setting your stop loss, you have two choices. You can either use the green line, which is the lowest price from yesterday, or you can use the green cloud as your stop loss level. Set your target at a risk-to-reward ratio of 1 to 1.5. To enter a short trade, you should wait for the price to go below the green line, which is the lowest price from yesterday. Also, make sure that the market is going down. If these things are true, you're ready for a short trade. For setting your stop loss, you have the option of using the red line, which is the highest price from yesterday, or the red cloud as your stop loss level. Set your target with a risk-to-reward ratio of 1 to 1.5. Now, are you ready to see how our strategy works in the real world? We tried it out on 100 trades for 11 weeks, and guess what? Our strategy won 84% of the time and made us a whopping 435% profit. That's amazing, right? Out of those 100 trades, we had 8 wins in a row and only 2 losses in a row. And if you want to know how to avoid losing money and protect your investments, you need to watch this video. I'll show you a strategy that you can't afford to miss.